Hey, welcome back. It's good to see you again. Today, we're tackling something that could seriously affect your finances, especially if you currently own a home or are thinking about selling one in the future. President Trump just floated the idea of eliminating capital gains taxes on home sales. That's a major policy shift, and if you're in the market, or even just watching it closely, this could have a bigger impact on you than you realize. Now, here's what many people might not know. Under current U.S. tax law, when you sell your primary residence and make a profit, you're allowed to exclude up to $250,000 of that gain if you're single, or $500,000 if you're married. That sounds generous, until you realize those thresholds haven't been adjusted since 1997. Meanwhile, home prices across the country have soared, more than doubling in many areas. But the tax exclusion limits? They've remained completely frozen. As a result, more homeowners are being hit with capital gains taxes when they sell, especially in high-cost markets like New York or California. And those tax bills can be a nasty surprise. You might have bought your home decades ago at a modest price, but now it's worth 6 or even 7 figures. That's great in theory, until you realize the IRS could be taking a massive slice of that profit. So it makes sense that this topic is gaining traction again. But before we go any further, I want to hear from you. Have you ever thought about selling your house but decided against it because of taxes or closing costs? Or maybe you know someone in that situation? Let me know in the comments. Even a simple yes helps spark the conversation. I think a lot of people are quietly grappling with this. And while you're here, if you appreciate straightforward, clear breakdowns like this, go ahead and hit subscribe. It really does make a difference. All right, back to the policy. During a recent meeting in the Oval Office, President Trump said the administration is looking into scrapping the capital gains tax on home sales. And this wasn't just a throwaway remark. It came right after he approved a bill offering new tax cuts for tipped workers and auto loans. So this appears to be part of a broader tax-cutting strategy. The core idea here is that eliminating this tax could encourage more long-time homeowners to sell. Right now, many people are holding on to properties they've owned for decades because selling would trigger a massive tax hit. They've built up significant equity, but they're hesitant to cash out because the tax consequences are just too steep. So instead, they stay put, which contributes to the current housing shortage. The housing market functions best when people are actively buying and selling. But when sellers feel like they're getting penalized just for moving on, they're more likely to delay that decision. That clogs the system and limits housing options, especially for younger families trying to buy their first home. From the administration's perspective, removing the tax is like removing a bottleneck. It could increase the number of homes for sale, give buyers more options, and maybe even stabilize prices a bit. Sounds like a win-win, right? But, as always, there's more to the story. For starters, the people who would benefit most from this change are those sitting on the biggest profits. Imagine someone who bought a home in the 1980s or 90s in a place like San Francisco or Boston for around $100,000. Today, that same home might be worth $1.5 million. Even with the current $500,000 exclusion, they'd still owe capital gains tax on $900,000. Removing that tax would save them a fortune. But for someone who bought their home just 5 or 6 years ago and hasn't seen a big jump in equity, this change won't do much. So it's fair to say this proposal would mainly benefit wealthier, long-term homeowners. That doesn't automatically make it a bad policy, but it does raise fairness concerns. Should the government be offering a massive tax break to people who are already sitting on substantial real estate wealth, while renters and younger buyers continue to face affordability crises? And there's another angle: investment speculation. If capital gains on home sales are completely tax-free, that could attract more real estate investors looking to flip houses or run short-term rentals. That might further limit housing inventory for regular home buyers and push prices even higher. There's also the broader economic environment to consider. Mortgage rates are still hovering around 7%, which is a significant hurdle for first-time buyers. If investor activity increases while rates remain high, we could end up with more supply, but still not enough affordable homes for the average family. Now, here's an idea that's gaining traction among economists and housing advocates. Instead of eliminating the tax altogether, why not simply increase the current exclusion limits to reflect modern home values? If the $500,000 threshold from 1997 had kept pace with inflation, it would be over $1.2 million today. Raising the limit could offer relief to longtime homeowners in high-cost areas, without handing out massive tax breaks to luxury property sellers. So what's really driving this proposal? It's partly economic. More home sales could loosen up the housing market, but it's also clearly political. This kind of tax reform appeals to older and wealthier voters, who tend to be more likely to own homes and more likely to vote. Strategically, it fits into a broader package of tax cuts aimed at shoring up support ahead of the election. If you're a senior thinking about downsizing, or maybe your adult kids have been nudging you to move, this proposal might grab your attention. That potential tax bill could be the one thing making you hesitate. Eliminating it might make the decision easier. But on the other hand, if you're living on Social Security or fixed income and don't own a home, you might be asking, what does this do for me? And that's exactly why this issue is so divisive. For some, it could be a financial game changer. For others, it's just another policy that seems to favor the already wealthy. Now, here's something important to keep in mind. Even though Trump supports the idea, it's far from becoming law. The No Tax on Home Sales Act was introduced by Representative Marjorie Taylor Greene, but it hasn't passed in the House or Senate yet. And even some Republicans are expressing concerns about the cost. The last round of tax cuts added over $3 trillion to the national debt. This could add even more. Fiscal conservatives who prioritize balancing the budget might not be on board. So it remains to be seen whether this is a serious legislative push or more of a political talking point as we head into campaign season. Still, the fact that we're even talking about it shows how broken the housing system really is. And even if this specific bill doesn't pass, it signals where the political momentum is moving. It also raises a deeper question. Should our tax code reward people for holding onto assets for decades? Or should it prioritize helping people get into the housing market for the first time? That's not just a numbers issue, it's a reflection of what we value as a society. So whether or not this proposal becomes law, it's worth asking, what kind of housing system are we trying to build? One that helps people cash out without penalty, or one that makes it easier to buy a home in the first place? Ideally, maybe we can do both. And if this topic got you thinking, even just for a minute, I'd really like to hear your take. Do you think cutting capital gains taxes on home sales is the right move? Or should the focus be on helping first-time buyers and renters? Let me know in the comments. And if you found this helpful, don't forget to subscribe. My goal is to help you make sense of big financial topics in a calm, clear way, without all the noise. Thanks for watching, and I'll see you again soon.